Welcome back. And in our top business story, the Ministry of Foreign Trade and the Dubai Department of Economic Development have signed a memorandum of understanding that will aid in promoting the country's global trade. The MOU looks to support the UAE foreign trade policy through trade relations, bridges of communication, and opening new trade and investment horizons. His Excellency Abdullah Ahmed Al Saleh, the Undersecretary of the Ministry of Foreign Trade, and His Excellency Sami Ahmed Al Kamzi, the Director General of the DED, signed the MOU at the DED headquarters in the Business Village. The Ministry and DED will exchange business information pertaining to international relations, promote and develop exports in the UAE, coordinate to participate in local and international activities, and cooperate to attract foreign investment. Arab Tech Construction has signed a contract with India's Rahija developers to build 3 mixed-use projects worth 750 million dirhams in India. In a company statement, the Dubai construction firm stated the agreement on the DFM and they had received a letter of intent from the Indian developer to build 3 projects over the next 48 months. Arab Tech holds a 63% stake in the venture. The Rahija Ravatana project in Haryana will include a high-rise building and 1,000 low-rise buildings, while the Rahija Phoenix project in New Delhi will include a 50-storey residential tower, a shopping mall and nearly 3,000 housing units. And finally, the Rahija Shristi project in Haryana will see 300 residential high-end apartment developments. Emirates Money, the consumer finance company owned under the umbrella of Emirates MBD, has announced that its loan book has reached $1 billion. The company was founded back in 2008, and officials attributed this impressive figure to its products, such as business and property loans. Other loans include non-salary transfer personal loans and loans against gold. There are currently 3 Emirates Money branches in the UAE, and officials say that the company will continue to deliver innovative lending solutions with attractive terms. And with that, let's now look at today's stock market performance here in the UAE and the entire Gulf region. And in our world business news, Germany's government is ready to recapitalise its banks if they are not sufficiently capitalised for the current market situation, according to Chancellor Angela Merkel. European finance ministers agreed on Tuesday to safeguard their banks as doubts grew about whether a planned second bailout package for debt-laden Greece would go ahead. Merkel also said Greece must remain part of the Eurozone and get a chance to get back on its feet. She also said it was vital that all Eurozone national parliaments approve the strengthened European Financial Stability Facility, as Germany has now done. France and Belgium rushed to the aid of Dexia SA on Tuesday in what will be the first state rescue of a European bank in the Eurozone sovereign debt crisis. And we have Bruce Powers, Head of Research at Trust Securities, here with us to talk about the issue. Welcome to the show, Bruce. Now, as I just said, this will be the first state rescue of a European bank. Do you think we've got more to come?
Well, I think that given the widespread nature of the problems in Europe, there'll probably be more to come. Dexia was one of the banks that actually passed the stress test that was done on all the banks several months ago. So what about the banks that did not pass? I think there's a growing crisis of confidence right now in the financial sector in Europe due to slowing economies, a sovereign debt exposure, and credit crunch. Now, if the banks are having a tough time getting short-term financing, there's going to be more and more problems. And as the crisis persists, that risk grows. So now we have the European Commission putting together a plan to recapitalize all the banks. That's hopefully going to solve the problem. It's going to take some time to do this. It's estimated that maybe up to 140 billion of euros will be needed in order to do this.
A substantial amount, isn't it? So with European finance ministers, do you think that they'll decide to make banks make bigger losses than previously agreed as well?
Well, it certainly looks like that's going to happen. Merkel recently came out and said that investors may have to take steeper haircuts on the second Greek bailout package. Many of the investors are Eurozone banks. Greece has not been meeting all the conditions of its second bailout, so they're falling behind. I think in this case, the debt holders are not in a very powerful position. You could argue that they're going to be lucky to get what they're going to get.
We'll see what happens in the next couple of weeks, of course. Thank you very much for joining us today. Thank you. A $120 drop in the price of gold is casting a dark spell on investors who thought they'd found the safest harbour in global volatility. The precious yellow metal tumbling to a 2-month low on Monday, sending it ever so further away from the lifetime high it reached in September of around $1,920 an ounce. What was perceived to be safe is not anymore.
I think the final straw for the commodities bulls is to pay attention to what the central bank is doing in China. They're fighting inflation. The only way you reduce inflation is you reduce demand in the economy. So it's about to see a big reality check, the commodity complex.
And before we go, here's a quick overview of the oil, precious metals and currency markets. After that, we have the day's sports news for you.